Hi everyone, it's Melissa Colletti with eXp Realty.
And Danielle Tully with eXp Realty.
Today on our little talk of Girls Just Want to Sell Houses, we wanted to address things that we've learned this month.
What I learned is in a recent survey, 66% of potential buyers out there think that they need a perfect or very high credit score in order to be able to be eligible for a loan, and that is just not correct.
Well, that's good.
So overall, 620 is kind of the number they throw out for conventional loans, which is, higher than the fives. But so you do have to have some credit, some decent credit. But there are some FHA loans. They're a little harder to get. That could be as low as 580 out there. So that's a far cry from needing high sevens and 800 level credit scores. So there's definitely a lot of room, definitely small things that can be hit. If you don't hit those numbers, there's, ways for us to help you figure out how to do some things to get that goal. Yeah. So if that's your goal and you just don't think you can hit that credit score, or you've had something happen and something's your numbers aren't there, reach out anyway, because there is still a pathway to homeownership for you, for getting a loan.
Yeah. So, well, that just goes to say that interest rates aren't stopping everyone from buying either. So I guess I found that too on a quick little note for that.
Yeah.
It ties into what you're saying.
You never know these days,
right,
what you're going to be paying for
anything.
But
you don't know what you don't know. So if you don't go and meet with a lender and have a discussion, you're never going to know. So, you know what I mean? You may think that buying a home is just not within your reach, but you can go and talk to a lender and they could tell you where you're at. And then a good lender will also tell you what you need to do in order to get to where you need to be to purchase a home.
Absolutely, yes. So, interest rates are a concern, but there are still people out there, right, who still need to or want to. One of the first things when we're talking with a potential buyer is talk about the importance of finding a good lender, a local lender, somebody who we hopefully have a relationship with, and we have relationships with these lenders, not, because they have proven themselves. They are very good. When they say they can get you approved, they can get you approved. And when they say they, and it's not even approved. I'm sorry. When they say they can get you funded is really the important number, right?
Those are some really nice words.
Yeah,
You've
approved.
Funded.
Yeah, approved is one thing.
Funded is another.
Funded and actually being able to get those keys in the end is more important. I mean, it's been less than a year since the last time I had it was probably about 6 months ago, where I had a last minute switch for my buyer. They did not choose one of my lenders. They came in with a lender that they kind of knew and had worked with that firm before, not that lender, but that particular brand. And they were not from local. And it was not good, and we had to get that buyer somebody here last second, and that lender ended up being able to start to finish in less than 2 weeks.
So it worked out.
Business days.
It worked out.
Yes.
That's good.
Yes.
Yeah. Well, then I guess my other thing that I learned this month that was really important to me was, and it all kind of ties in together, so it's really nice, but communication changes everything. So first and foremost, you have to have a good team. You have to have the right agent, the right lender, the right attorney, where everyone's communicating so we're all on the same page. Quick response, managing time, managing expectations. Just keep constant communication open, answering questions, being available. That's really important nowadays when everything is just so instant. I mean, you can go on the internet and get information like that, but in our field, in our industry, everything happens very fast. So communication is definitely key, and people that lack communication in this industry it's really not a good thing.
It's funny how this is all kind of going hand in hand, and we didn't. We really didn't. Again, another reason that we refer the people we do is because what is the worst thing? A worst thing in a transaction is an agent is needing to go to your client for every single thing. What did your lender say? What did your attorney say? it's this communication, when a transaction has a lack of communication, when the attorney and the lender and the title company and the agent are not all on the same page, they're not looping each other in, it makes for such a rocky,
Headache.
rough
It's a headache.
transaction
Yeah.
that is, it's really stressful for the buyers too, or the sellers,
Yeah.
because it can happen on both sides. You just don't have a lender on the other side, but it really can happen on both sides, and it just adds extra stress to the, because again, so this
Yeah.
is not about us
No.
and what's easy for us.
No.
It really is.
It's about what's
There,
best
if you've
for
got to
your
be
client.
the go-between
Yeah.
between everybody, and you're working and you're packing, or you're, whatever, there's just so much going on in your life, that,
Well, yeah, you
need
don't want
be
it
the
to be
go-between.
stressful. It
No.
should be a smooth transaction if you have the right team and so, even if you don't have other, attorneys or lenders that you haven't worked with, that's not a bad thing either. As
No.
long as the communication is there, so again, we're all on the same page. It takes less stress off of you, so you can focus on packing or, looking at homes, because it should be exciting. So
Yeah.
I learned that this month, and I think those are two really important things to have learned. I mean, you always know about it, right, in our business, but to have it brought up again, it just reiterates everything that,
Right.
communication is key, and people are still wanting to buy.
Absolutely.
Yeah.
And then the last thing that I think is a miscommunication or misunderstanding, maybe for buyers, is there is a difference between a fixed rate and a fixed loan.
Yeah.
There really isn't anything. There isn't anything called a fixed loan. I mean,
I was
in
gonna
real
say,
estate,
what is that?
right? So fixed rate means that, the interest rate that you lock into in the process, and that's going to be the rate you have for the duration of that loan. It could be 15, 20 years, 30 years. You might decide to refinance it. You might decide to sell before that time. But from the moment that you sign the papers to the time that you've decided to do something else, the rate will stay the same no matter what's happening, if it's going up or if it's going down. Usually when it goes down,
And when you say
significantly
papers, it's contract, when you sign your contract, right?
well, when
Or
your
your loan application?
not your application, your loan papers at the closing table.
Oh,
when
yes.
you're being funded.
Yes, I'm sorry, yes.
Right, obviously, through that
That's why
whole
I
process.
don't, I'm not a lender. Just a little humor.
Yes, no, when obviously you get the rate, your lender will talk to you about the rate that they're gonna lock you in on. And so you'll know your payment approximately at that time, and,
Yeah.
and until you get the CD and all that other stuff. But from the time that you officially sign those loan documents at the closing table until the time you decide to change, that rate will be the same if you choose a fixed rate loan.
Correct.
But
There are other types of loans.
just because
But-
your payment that day when you close is, throwing out a number, $2,700. Say your entire out the door mortgage payment every month is $2,700 for the first however many months, does not mean that's not going to change, because
It's not?
no, because part of your lend, yes, it is your principal and it is your interest rate. That is a portion.
You got your
Of what that
pie.
must- you got your pity, your pity, PITI. So you have that pie part of it,
Yeah.
but you need the tie part of it,
Yeah,
or the T part
taxes
of it.
and insurance.
So taxes and insurance, and a lot of people are getting their taxes this week updated
mine
for them.
too,
Mine
I
weren't that
know.
bad, but my taxes are bad to begin with, so so not that bad is relative there.
But that makes your payment fluctuate.
But the taxes can increase,
Mm-hmm.
will increase. And insurance can change as well. And so that first year, your insurance should be locked. But when it comes time
renew,
renew, and insurance companies do try to have a bit of a buffer there, with the understanding that that they're escrowing in a lot of cases. Sometimes not everybody escrows taxes,
paid in full,
and not
monthly,
and not everybody escrows their insurance. But if you do,
But if you do, it affects your payment
or
for
need
sure.
to, that will fluctuate your monthly payment.
Yeah.
Eventually,
Yeah.
but your insurance, your interest, and your principal will be the same amount
Yeah.
each month, though that
Yeah.
interest goes
With your
down,
fixed
but
line, yeah.
your principal goes up that you're paying, but that is kind of a fix, but it's the other two until
Yeah.
you do something. with interest.
I'm really glad that you brought up pity, because I will say that was probably one of the first things that stuck out in my head when I was going through my license. I was like, it's pity me. But that's how I remembered it. But everyone learns differently. But that was just a little ramble, just a little fun fact, I guess. But yes,
So those are some of the things that we learned this month.
Yeah.
That it's what did you learn?
communication is key. Buyers are still wanting to.
Interest
buy
rates,
and
your
your rates.
You're waiting, and then that
Yeah.
that people still want to buy, and that you can still buy,
Yeah.
and that you're perfect, that you don't have to have perfect credit.
Right.
So reach out to us to
Yes.
get your to get ideas for the best lenders for your situation.
Yeah. Until I guess we'll see you on the next video
Absolutely. Where
Have-
girls just want to have fun.
and sell houses.